Hello, welcome back everyone. Thank you so much for tuning in. A very significant hit to the appeal of US debt on the international market was dealt recently when China sold a record amount, $53.3 billion worth of US treasuries. In our quick video, I would like to share the details first and then talk about why this is very important, why this event should not be dismissed. So in the midst of the trade war with the United States, China made the decision to offload a significant portion of its US treasuries and US agency bonds in the first quarter of the year. The Chinese government announced the sale following its joint statement with Russia, where both countries highlighted their intention to continue moving away from being dependent on Western countries, primarily financial, of course, economically. What's truly surprising is that even a very close ally of China, Belgium, sold $22 billion worth of treasuries during the first quarter of this year, during the same time period. So it is safe to say that it's not just the countries that the IMF, the International Monetary Fund, likes to call China-leaning. Even U.S. allies begin to distance themselves from the dollar and from putting everything in one basket, so to speak.
The concern, of course, is that the direction of travel, if it is not appropriately controlled, you could end up basically moving dramatically away from a global rules-based trading system, which is what we've lived with for multiple decades now. So I'm going to start with giving you a sense of there's been a trend decline in the amount of the dollar in FX reserves over time. It was to be 70%, it came down, has come down over time. But most of the diversification is going to kind of non-traditional reserve currencies like the Canadian dollar, the Australian dollar. And yes, there's some to the renminbi, but it's a small fraction. So where, if anything, are we seeing any changes in terms of on the margin? You do see it in trade finance. So if you look at the left graph over there, that again looks at the different blocks, the China block and the US block, to see what's happening in terms of adoption of renminbi in trade finance. And within the US leaning block, you really don't see anything. That's not on the slide here, but I'm just telling you, you don't see much at all happening in terms of the US leaning block. But in terms of the China block, you certainly have seen an increase in the use of the renminbi in trade finance.
China used to be the biggest investor, not too long ago, just 5 years ago. Starting in 2018, however, around the same time when the trade war with the United States ramped up, China's holdings started to decline. And the following year, in 2019, Japan took the first spot as the biggest US debt holder. Japan, of course, is an ally. Foreign countries are aware that the United States economy is not what it used to be, and as an investor, the increase in associated risks makes you think twice whether the risk is actually worth the promise of a return on your investment in the distant future. Even if it's US treasuries, they're not as safe as they once were regarded to be. When a government issues massive amounts of debt, it has to pay interest on it. And as US treasuries yield increased, it meant that the government had to be in a position to keep paying that interest to all of its bondholders, or in other words, to its creditors. It cannot default. But the US government has been running deficits every single quarter, so even though it can print cash out of thin air, only to devalue its currency more and more, of course, it still needs to meet its obligations. It still needs to honor its liabilities. And so a surge in interest expense is a red flag to foreign investors who believe that a 10-year or even a 30-year US Treasury note is just too risky now. It's too risky to hold. And nobody knows what will happen a year from now, let alone a decade from now. So this is one of the reasons why there's less demand for US Treasuries, and with China now getting rid of $53 billion worth in treasuries, it is sending a very clear signal to every single country in the world to consider doing the same. Selling a record amount of US debt should have been expected. I don't think that this is a surprise to anybody. Dependency is a matter of national security, and there's really nothing worse than running the risk of being sanctioned and your assets, your sovereign assets, to be confiscated or, simply put, stolen, when you can just be proactive and sell those assets now. The main objective of the sale is, of course, as you know very well by now, is to accelerate the move away from the United States dollar. So while we are talking about de-dollarization as a distant threat, something that is happening but isn't really likely to hurt us right now, here we are. It has already been accelerated, and now, in addition to it being accelerated, other countries are taking note of this sale and will likely act accordingly in the near future. This is an excellent illustration by Bloomberg, by the way. The bright pink are treasuries, agency debt is in yellow. China started to sell significant portions of US treasuries in 2015. I do not think that this is a coincidence because, as we know, following the 2014 coup in Ukraine, the civil war began in the Donbass, and that was the first red flag that relying on the US-led financial system is really not in the best interest of those countries that are not directly aligned with Western policies. So China, as well as other countries, began to search for alternatives, and it is safe to say that they certainly found those alternatives by returning back to safe haven assets. There's a very clear correlation between the sell-off of US treasuries, this massive sell-off of US treasuries, and a really massive accumulation of gold, as can be seen here. It should also be noted that China reportedly does hold gold that is not reflected in this official data, so likely the reserve holdings are much larger than what is seen here. In addition to that, the IMF says the trend to sell treasuries and to buy gold is a trend shared among not only China, but also other countries. What's behind the sales of US treasuries, of US securities in general? Well, clearly geopolitical reasons are driving this. Even the IMF now openly issued a warning saying the US dollar is in trouble and countries don't really appreciate being sanctioned, so they're not supporting the reserve currency anymore. As geopolitical risks rise, we've seen a really sharp increase in protectionist measures used by governments. As is illustrated here, since 2022, there's been a surge in trade barriers, and as the result of this, trade fragmentation between the Western alliances and non-aligned countries increased since then. This is, of course, related not only to trade, but also to foreign investments, including US treasuries. There is a very clear trend. The dissolution of trade ties, especially in the context of conflicts and wars, it facilitates financial fragmentation as well as increased economic costs, which is what we're already starting to see. I will go ahead and end this video here. I hope that this was informative. As always, thanks for taking the time. Thank you for watching. Remember to give this video a thumbs up, consider sharing it, and subscribe on Rumble and YouTube. I would love to have you back for my next one tomorrow. You will find all of my social links in the video description below. Thanks for watching again, and enjoy the rest of your day. Take care.